Hello and welcome to all you tech geeks and management enthusiasts. Welcome to Celesta 2020, the annual Techno Management Fest of Indian Institute of Technology, Patna. This year, Celesta has gone entirely virtual and we promise to give you an unparalleled experience. So, call out your friends and get glued to the screens because the ride is going to get you #TechCited. This is the third edition of our virtual talk series, and today we have with us Mr. Rakesh Malhotra, the founder of SAR Groups. He is a serial entrepreneur since 1988 and an early stage investor in India, Singapore, and the United States. SAR Group companies are engaged in a wide range of industries, including power electronics, energy storage, renewable energy, water and air purification, industrial IoT, etc. Rakesh sir also serves as the managing partner of Incubate Capital Partners, which invests in early stage companies in India from an open ended balance sheet fund. A graduate from Jadavpur University, India, in electronics and telecom engineering, he started his career in 1983 at Nelco, followed by Mitsui and Siemens. Since 1988, he has been a founder and co-founder of 14 ventures. These companies currently employ over 9,000 people and have a combined revenue close to 1 billion US dollar. He actively mentors many startups and have combined revenue and sing, he actively mentors many startups in India and Singapore and likes to interact with engineering and business school students to develop their interest in entrepreneurship. Sir, we are truly blessed to have such an eminent personality as a part of our guest lecture series. Warm greetings to you.
Thanks a lot for inviting me. It's nice to be with young students. It's refreshing. It kind of charges me up. Like doing this a lot. So thank you very much. Today, actually, my hope would be to sort of stimulate at least a few of your students and participants on the path to entrepreneurship, leaving behind some of the security that you guys have on offer from the jobs that are offered to you on your passing out from the college. Before we start, I think there's a bit of historical peek into why India is such an entrepreneurial country and such an entrepreneurial society. So I don't know how many of you are aware, but if you just go back, let's say about about 400-500 years, the word GDP, 40% of it was contributed by India. And we are nowhere in that vicinity anytime in the next, let's say, a few decades. We are down to under 4% now. And what has really changed? I think, we were always a very entrepreneurial society as a country. We had traders going all over the place, taking risks, even when there was no communication, no proper transportation, trying to do business on all frontiers around the world. And then came the British and the occupation, and I think somewhere in that whole period of British occupation, we kind of lost a bit of the track of entrepreneurship and became a very security oriented society. And then but then the entrepreneurial seeds or the trait of Indians as entrepreneurs has always been there. And then the business families brought the first wave of entrepreneurship back to in free India, whether it is the Tatas, the Birlas, the likes of Ambani's and whoever else. So that was the first wave of entrepreneurship that we saw in free India. But then came along an age of entrepreneurs, who were sort of inspired by people like Mr. Murthy and Mr. Premji and people of that nature, who basically showed the way that people from middle class India who had entrepreneurial abilities and desires could also turn entrepreneurs. And I for one and my co-founder, we are people who were inspired by that generation of entrepreneurs, and we kind of rode the second wave of entrepreneurship in this country. But what is happening now, and what is likely to happen over the next, let's say, 15, 20 years in this country, is what is the third wave of entrepreneurship, and which is where you are finding that disruption is all over the place. One, because the time in which we live is very, very fast changing time, where there are many inflection points of change that are happening because of technology, because of the presence of smart devices, the IoT, and various other trends that are pretty unstoppable. All of that are giving rise to a disruption in the environment, and coupled with that, there is this third wave of entrepreneurship that India is seeing, where we are sort of able to where we are able to see there is some kind of a noise happening here in the background. I'm not sure why. Okay,
Um,
yeah. So
sure, sir. I guess there is some network issue because we cannot
okay,
hear any voice.
all right, never. Yeah, what I was saying is that in this environment of change and disruption, which is powered by various unstoppable trends that are going around of technology, etc., and the combine and that coinciding with the third wave of entrepreneurship that India is seeing now, which is a very large base of young entrepreneurs straight out of colleges or sometimes a little bit of experience, but trying to do different things, trying to create solutions for different problems as they emerge out of all this disruption that is going all around us. So this is an absolutely exciting time. If there was ever a good time to be an entrepreneur, it is now in this country. And if there was the best place on the planet, actually, in my opinion, today to be an entrepreneur is in India. And yes, the the future really is now holding India a very great opportunity, whether it is in manufacturing, whether it is in technology, whether it is in software products, not as much services as products now, and whether it is in consumer businesses. This is a society which is going to give rise to hundreds, if not thousands, of successful companies that will be globally competitive. And people like us who have had the privilege of being through that journey earlier on, a lot of us now, a lot of my colleagues, friends who are in similar situation, are all very eager and happy to sort of handhold and support young companies that are coming up across the country. And I'll be happy to share my experiences through a Q&A session. I don't want to talk a whole lot, but I would definitely want you guys to be left with one thought, that the safety mindset that we have all grown up with, not you guys not so much as we did, is now it's time for us to put it on the side and actually take on the opportunity that presents us today in this country and try and make a difference. Because the earlier you try that, the better your chances of success, and lesser is the risk that you are taking with your life, because you have more time on your hand to go work at it, figure it out, and then take it from there. Wonderful. I would like to end here and take on an interactive kind of a session for the rest of the time. Thank you.
That was really thought-provoking talk, sir. We have gathered a lot of questions from the audience, and I would be presenting them to you. Sure, sir.
All right, go right ahead.
Okay, so the first question we have is from Ankit Singh. He asks, do investors consider a startup seriously if their idea is already being implemented by another grown startup, but the new startup claims they have better implementation and more scalable business model?
So see, look, in today's world, everybody is getting disrupted. So whether it is a earlier and a scaled startup or whether it is a larger established company, everybody is prone to disruption. So if you have something that you are doing which is a far more scalable business model, and you can actually make your proposition clear to investors, they are always open to look at it. However, remember one thing, it's always good to create a clear proposition by putting in more skin in the game from your side in the early days, and take your proposition to a point where it is a lot simpler for anyone to understand that as to what the proposition really is and where it is likely to find traction. If you want to attract investment, that's the best way to go about doing it. It's always better to build as far as you can with your own resources before you go to investors. You should go to investors early on, but only once you have kind of crossed a bit of the threshold, because it does two things, right? One, it does show that you have skin in the game and you believe in your model or your idea or your venture. And secondly, it allows you to also clearly demonstrate, at least to some degree, the proposition that you are wanting to get funded.
Sure, sure. That surely should answer the question. Next question we have is from Abhishek Chopra. He says, I wish to become an entrepreneur, but whatever ideas come to my mind, I soon find that they are already being implemented. So, how to think out of the box?
Right. Okay. So it's you are living in a country of 1.4 billion people. Okay, and today the word is also a connected word. So effectively, you're living in a place of 8 billion people. There is more, there is enough chance and more that whatever is coming to your mind has also come to other people's mind, at least a few. So finding that absolute unique idea, might be actually too much of a overkill. I think what is important, therefore, is that you find a clear problem to solve. So if there is a customer or a set of customers which are large enough, who have a problem which is waiting to be solved, and you find a good way of solving that problem, even if there are other people who are solving that problem, it doesn't matter. I mean, as long as your way of getting to that solution is more effective, it is more cost effective, it is better in terms of the outcome, customers like it more, you will build a successful venture. So and along the way, a lot of pivoting will happen. You will figure out your idea, what you started with and what you ended up with would look pretty different. And I think that's a normal evolution of any venture, any startup into a real company. You start somewhere with some kind of hypothesis. You go test it out with customers, and as it sort of evolves, and as you get to learn the customers' problems better and understand the solutions better, you kind of pivot many things. Sometimes you even completely change the problem that you are going to attack, because you figured that whatever you started with wasn't really a great problem to go after, because you might have thought it's a big problem, it is not solved, but it's already been solved, and there is really no space for you to go and do something. But that's okay. I mean, that's how most of the ventures evolve. uh, you know it's not over a period of it's not over a eureka moment that a company is getting built. That's the time that you start, that gives you the push to get into doing something. But then you keep evolving, and you sort of figure your way out as you go along and interact with customers.
Sure, sir. That must answer the question. And let's take next question from Janish. He asks, Sir, do we start doing this entrepreneurial journey by the end of our graduation or while being in college, or should we have some corporate experience first?
See, look, I mean, whenever you think you have a clarity about what problem or what opportunity you are going after, is a good time to give it a shot. If you have had some experience working somewhere, it will give you obviously some advantage in terms of figuring out how to work with people, how to work in teams, etc., etc. All experience is valuable at the end of the day. But even if you did, you will find that a startup is a great teacher. It teaches you at a much faster pace than you can learn in a corporate environment, because you get to do many things in a startup that otherwise is a much later stage exposure for you in a corporate environment. So earlier the better is what I would say.
Great, great, sir. So next question we have from Yuvi Dilawat, and he asks, most Indian startups are service driven, but competing with global firms in this category is very difficult. How do you suggest we approach this?
Well, I mean, actually, Indian companies have shown that they are pretty good at service businesses. Whether it is, you have seen what about $200 billion of software exports happening out of India now, but largely services. In fact, frankly, now the real opportunity for the new age startups that are coming up might be in products, and products being built on the top of some phenomenal public infrastructure that is available today. If you really look at it, India has some of the best examples of public infrastructure success in terms of digital infrastructure, whether it is UPI, whether it is the health infrastructure that is being done by iSpirit, whether it is, Aadhaar. Look at the amount of public infrastructure in terms of the digital stack that exists today, that it is capable of throwing up some enormous product companies, something like, let's say, PhonePe, which was bought by Flipkart, founded by some of their ex-employees itself, is a company that's an example of something that has come up on the UPI infrastructure that was built in the public domain. So today, actually, India has some phenomenal opportunity of product companies being built on top of all this digital infrastructure, public infrastructure that is getting set up across the country. And young companies are really looking at it, and I mean, I know of plenty of companies that are trying to take advantage of that infrastructure and build scalable product companies. But that doesn't mean that service companies are not good companies to build, or manufacturing companies are not good companies to build. But I think the time now is for product companies in terms of the next 10, 15, 20 years. The next wave of big success out of India will be product companies, is what I think.
Yeah, that's great, sir. So next question we have is from Prashant Katiyar. He asks how to find the right time for scaling a startup. I think he wants to ask if there is a startup and we have started it small. So how to find when to just boost up the scale?
Well, whenever you can, earlier you can, the better it is. So as soon as you've got your proof of concept right and product market fit right, that means when your customer is prepared to pay for it, you have paying customers, you have figured out what is the, a lot of mistakes that are made by young startups today is falling in love with what their idea is, which means that the level of flexibility to listen to the customer early on, and actually evolve your idea to better fit the problem that you are going to solve, or the market opportunity that you are trying to address. I think that's one of the problems that I see in many startups today. But if you have got that right, if you have got your customers accepting your products or services, and you have kind of done it at a small scale and made your mistakes while you were small, uh, but you are now kind of ready, then wasting any time in scaling up is a bad idea, because there are plenty of people on your heels who are trying to do the same thing. So the earlier the better.
Okay, sir. Sure. So next question we have is from Vijaya Gonugade. She asks, sir, what are your views about the entrepreneurship opportunities that people from distant remote areas, for example, village areas have?
So I think one of the biggest thing this whole COVID pandemic has taught us is that distance now in this country doesn't matter that much, right? I mean, I have a I'll give you an example. I have an investment in a company that I helped start, which is in cutting edge industry 4.0 product development, uh, which is essentially targeting very large uh, refining and oil and gas companies like Shell and Mobil and all of Exxon and all of these kind of guys. And they have they're headquartered in Singapore, a development center in Bangalore. That's how they were prior to COVID hitting them. And 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 today, I was just talking to their co-founder like a few days back, and he was telling me that he has people from Gorakhpur, from uh, some Rajamundry, and I mean 3-4 other places he mentioned, all kinds of small towns, not villages, but at least small towns. From where these people are working remotely. And he was saying that I was also surprised that the internet works so well even from those areas. And they are actually able to work with customers, work on production servers of the customers remotely from those locations. So frankly, the opportunities today in the smaller towns and the remote areas might actually be even bigger in some ways, because the level of competition and availability of services and solutions in those markets is lower than the big cities. So as a result of which, you might actually see some opportunities, unmet opportunities, to start things which are targeted at those markets, because the infrastructure is no longer a challenge, especially the digital infrastructure.
Yes, sir. Thanks to the telecom revolution, the 4G. So next question we'll be taking from Piyush Chauhan. He asks, we as engineers tend to get solution oriented. How to think in problem oriented manner? How to identify best problems to solve?
Well, I guess the best way is to keep your eyes and ears open and be in touch with how things are around you all over the place. And you will observe. The more you observe, the more you will figure out what is there, what is missing. And sometimes there is also, insights come from your own experiences in life. So many times you figure out unmet needs because you felt them as a consumer or as a customer, right? So keeping your eyes and ears open, being observant, I guess, is the best way to figure out what's going on around you, and that includes finding problems that are not solved. But having said that, being an engineer, is about solving problems, and actually being an engineer gives you a toolkit to think around problem definition and then lead to solution. So I guess even the solutions start with defining a problem, right? So that, I would imagine, is a skill that you guys have got from your institute due to the training that you've been given.
Sure, sir. Sure. So next question we have is from Puru Thakkar. So she says, "Hello, sir. I am a student and have an app called News that gives news in the form of memes. We already have a few downloads, but to grow more, we need a marketing manager. How to hire for this core role?"
It's a difficult question to answer without knowing what your business is. But typically, a good balance in a co-founding team, whether it is co-founders or whether it is early employees, whichever way you look at it, is to balance between technology, product, and business development. So if you don't have a co-founder, one of the good ways of doing it would be to, and you feel that there is scale possible, one of the good ways could be to find a co-founder that complements your skills in that area of business development and marketing. And that's also a good test, because if a well experienced, good good marketing person can see how your app can be scaled, that might also be a good validation of what you are doing. And the person could be a hire with with some sort of ESOPs, or it could be a co-founder. It depends really on what stage you are and what it takes to attract the right talent.
Great, sir. Great. I hope this must be insightful. So, next question we have is from Mohammad Faisal. He asks, sir, what do you think? What skills and knowledge a person must have before creating a startup?
Perseverance,
Sure.
and self-belief. I guess those are the two skills that you must have, because you are going to, no matter what other skills you have, you will face enough challenges along the way that will make you doubt whether you took the right decision multiple times. And if you have the ability to stay the course through that entire period, your chances of success greatly improve. So I guess this whole skill or capacity to persevere and stay the course is, I guess, the biggest skill that you.
Yes, the endurance to bounce back, certainly. So, next question we have is from Janil Nagrecha. He is asking question based on your previous answer. Sir, is it a good idea to start with service-based startups or wait and learn till we have our own product ideas and design?
Frankly, there's no magic answer answer to this question. Uh, Typically, if you see a big enough opportunity, and if you think you have an idea around how you can find a solution to meet that opportunity, I think it's a good idea to do something and test it out at some level, and demonstrate the whole thing. Because see, there's nothing like a perfect idea, or nothing like a perfect product, because everything has to evolve. It's a living being, and it keeps evolving as you go along. So somewhere you need to start. As long as you have a reasonable idea which customers find valuable. Many times what mistake we make is we get ideas and we think that they are very great ideas, because in our head it is solving some very important problem and there is a big opportunity. But we forget to test that whole hypothesis with people who are going to pay. And as long as they find it attractive, and they find it desirable, then you have something happening here. You may not know all the answers, then it is time to go and find the answers. So whenever you are ready with that kind of a situation, you're ready to start, and you should start, not wait.
Sure, sir, sure. So, next question is from Charan Teja. He asks, sir, as most of Indians are from middle class family, so how can we convince the investors to invest in our startups?
Well, if you are from a very rich family, you don't need investors to invest in your startup. So investors understand that pretty well. So I'll give you, our own example. For example, my father was an IAS officer, a very honest one at that. So he could give me a good education, but not a lot of money to start my venture. My co-founder's father was a principal in a school, so he didn't have a lot of money either. So frankly, and we started our business at a time when there wasn't even this much of an investor community. So this is 1988. My co-founder joined me in 91. 1986, 87, 88, that's the time when I started my first venture, and the second one is in 88. At that time, there wasn't that much of appetite, and as much of avenues of investors available like it is today. But if you have a good, strong ideas, the best person to pay and invest in your idea, of course, is your customers. So the companies that get funded by their customers paying for their products are usually very, very rewarding for their founders. For example, in our case, because we didn't have a lot of investors at that point in time in the country, we essentially grew on our customers' money. So we could sell to customers, they paid for it, and we kind of gradually built out the business. And as a result of which, by the time we actually ended up selling the company in 2011, after starting it in 1988, we owned 90% of the company even at that point in time, because we actually didn't find investors till very late, till 2007, when we got our first outside investor after 19 years of running the company. But the fact is that investors don't look at how much money you have personally. They obviously are not interested in you having a lot of money. They're interested in you as an entrepreneur. They're interested in you on what you can create. So I don't think being from the middle class is any disadvantage. If anything, it is an advantage because of the value system.
Sure, sir. Great. So, next question we have is again from Puru Thakkar. He asks, sir, when we have an idea, so what should we do first? First, we should try to get investment by investors by pitching, or we should get a patent over that idea if it is so unique. And personally, also, I would like to add
Yeah.
one.
Sorry. Yeah. Go ahead.
Sorry to interrupt, sir. One, I'd like to add one thing. So recently were trying to have our own startup. So we also face similar kind of problems with legalities. So whether we should form LLP or we should get our logo trademark, name trademark. So in legalities, if you can just guide us.
Yeah. So see, look. So I can answer this in a very general way because it's specific to every single situation. So if you have something that is so unique that it should be patented, then you should you know find at least some resources internally to patent that patent that particular thing. And these days the WIPO you know application is not that expensive, and it gives you a significant runway in terms of predating before you have to file the final patent applications in different geographies where you want to protect, which is more expensive. So you get almost like about 2 years of window in which you can take the idea forward, and the date of your protection will be from the date you filed the preliminary application. So therefore, that's not as expensive. So if you want to file, if you have an idea which is really that worthy of being patented, then you should look at probably filing at least a preliminary application. That's one. But the question you asked was, should you go to investors first and do everything else later? So the question is, you should go to investors after you have demonstrated at least something. So typically, investors don't like companies or founders who have not risked anything on what they are seeking to raise investment on. Right? So therefore, if you really want investors to believe in you, first you must believe in yourself. Right? That's the first test an investor will look at when he looks at a startup. How much is this guy willing to believe in himself? What is he giving up for this idea? Or what is this team giving up to take this idea forward? So that conviction is what he's betting on. And as a result of which, it's always a good idea to do something with whatever resources you can muster, from friends, family, yourself, whatever way, and take the whole thing to some degree of serious execution. Even if it is not fully done, people don't expect it to be fully done, but at least go forward and demonstrate your commitment to that particular venture and try and prove a little bit of customer traction or some proof of concept with that idea before you approach investors, because investors otherwise will ideas are plenty, okay, and they are available in plenty to investors. There are typically any one of us who runs an active investment operation will be getting about dozen emails a day of new ideas, right? So how do you filter that? You filter it. First filter that you apply is how much has the entrepreneur or the team believed in their own idea and how far they have taken it before they have started to go out and raise money for their venture. Does that
Sure, sir.
answer your question?
Sure, sir. It must answer the question, and it answered mine certainly. So, next question we have is from Sai Nandan Panigrai. He asks, "What is the right way to judge someone before partnering with them for starting up? It often happens that when founders have different ideas in the long run, it affects the startup in a negative way."
Yeah, so see, chemistry is more powerful than physics or maths in partnerships, right? And so you have to find the right chemistry. And typically, the best way to get there is by some, you normally find such people through your network of some sort, right? I mean, whether it is your college friends or whether it is people that you have known in different social contexts, etc., etc. Typically, it happens like that. But that's not to say that you don't find completely, new people and they hit off very well together on the day one. This does happen, but in general, you find your co-founders or partners in your network. In fact, you even find as you go along, a lot of your key employees and talent out of the network that you have, extended network that you might have. Because people in early days believe in you more than they believe in the idea or in the company. So therefore, chances of somebody believing in you is higher if he's part of your network in some form.
Great. Thank you, sir. So next question we have is from Sahil Joshi. He asks, which type of startups become more successful in future, the one which is solely private or which is made public, that is putting up on the stock market?
So I see. Okay, I think the way to look at it is that going public or staying private does not really change anything about the success of a startup in real terms. Unless you are a consumer company and you have really become this big that going public helps your brand. In which case it does help to some degree to go public. But other than that, remaining private has its own advantages because you're not answerable to shareholders on a quarterly call basis or a quarterly earning basis. So therefore, you can think more long term as long as you are private. I mean, you have examples of companies like Dell Computers wanting to go private after being public for years and years together, right? Because it's hard for public companies to be able to convince their shareholders, to make long-term bets which will show poor results in the short term in terms of financial results. So, if for a startup at a very early stage, I don't think going public is even an option really, and I don't think it is helpful. Uh, Going public is more for access to a much wider capital, much wider visibility as a brand, etc., etc. But I don't think, in general, startups should be trying to go public too early.
Thank you, sir. So, next question I have is from my friend Sheesh Chandra Mishra. He is asking, sir, having a consumer-based company involves a lot of marketing and a lot of effort goes on in just making it to the view to the public rather than working on the actual product. So, is that an advantage if we start a business-to-business company?
See, look, at the end of the day, no amount of marketing can sell a bad product, right? So even a consumer company's core always comes from the product being great and desirable by the consumer. So to that extent, a consumer business is also finally about having a great product that meets the customer's requirement. Now, as far as B2B businesses versus a B2C business, they are two different businesses. At the end of the day, both of them have their merit. I mean, A B2C business is more about a much wider set of customers who don't necessarily have the capability to analyze everything about your product at the time of making a purchase. So therefore, they rely more on what the image or the sort of position of the brand in their mind is. But that said, B2C companies are initially much harder to build because of being able to establish that scale of trust and imagery in the consumer's mind. But they have a much higher moat or defense because it is so hard to build that brand. Whereas B2B companies are more driven by technology, product differentiation, etc., or cost, or sometimes even cost competitiveness, etc. And they have their own competitive advantage set that you need to build to be successful over the long term. So it might not be so much consumer brand, but it still has a brand. So Infosys is a brand, TCS is a brand. These are companies that have built massive, competitive advantage in a B2B scenario, and customers trust that brand. So there is a need to build a brand, but with a different set of audience. And marketing is equally important there as well. Brand is equally important there as well. It's just that the customer is different, and the process is slightly different.
Great, sir. Thank you. So next question I have is from Nidhi, and the question is, sir, generally when the startup is going on in initial phase and people are not much aware about the finances and they look for investment, then a lot of people may try to take advantage of their less experience and gamble into having more equities than they actually invest, and in turn having a loss in the people who are actually doing the hard work. So is there any platform or any way we can get guidance regarding those finances?
Yeah. So see, look, valuation is a matter of agreement between an investor and an investee, right? At the end of the day, it's an open market. It's a competitive market. Good investors don't try to take too much equity away from the founders, because they know that if the founders don't have enough interest in the company, then whatever equity they may have is useless, because they are not the ones running the company or building the company. It is the founders who are building the company. So if you look for pedigreed investors who have done it and who have a reputation to work for, you will generally find that they don't make these kind of one-sided deals. Now, of course, there is plenty of advice. You can find a mentor. It's typically good to have, for any startup actually, to find some kind of a mentor somewhere who they could, who they could connect with, and who has no vested interest in his advice being fair and transparent. So I guess that is one way of finding good advice. A mentor is a good asset to have in your company when you start something up. Also, there are plenty of angel networks now that are very active, whether it is India Angels Network in Delhi or Mumbai Angels, Chennai Angels. There are tons of angel networks all over the country today, and they also they're usually people who have a fair amount of experience. The people who invest there have a fair amount of experience, either as entrepreneurs or as senior professionals who have seen the world. So typically, if you go to an angel network, you tend to be able to find or discover what is a fair value of your startup at the time when you are starting. So typically, if you don't want to give up too much of your company, take it with your own sweat and a bit of risk capital to a level where some degree of proof of concept is already on the table. Then you will end up getting more money for less equity, because you have taken some risk out of the venture and not thrown everything in terms of execution risk onto the investor. So that's the way to get more of your company.
Thank you, sir. Thanks a lot. And next question we have is from Rishikesh Devanathan. He asks, India's GDP has a large contribution from service sector, while agriculture, electricity, and other sectors are left out. How can we create viable startups that address these sectors?
So actually, it's a good question because, frankly, there is a massive opportunity of agri-based businesses in the country today. Whether it is in food processing, whether it is in productivity enhancement in agriculture through technology, IoT, and other kinds of other technologies that are now available because of smartphones being available to farmers. There is a really big opportunity in the agri sector at this point in time. And as far as electricity is concerned, I think we have seen the revolution of solar installations in the country already over the last decade or so, and it's going to continue. And you will see massive opportunities in energy sector, whether it is in clean mobility, electric transportation, whether it is energy storage. This is an area we operate in, and we see enormous opportunities of companies being built in the energy sector as well. But I think the agri sector is even more unexplored and under-penetrated from a startup standpoint than even the energy sector. But both of them have great opportunities. And a lot of companies are being built in that area as we talk. A lot of entrepreneurs are working in that space.
That's great, sir. That answers the question. And next question is from Jayesh Mala. He asks, Sir, we have developed some unique mechanicals. Is there any crowdfunding platform in India to get financial help to develop a prototype?
Yeah, so I think I see a lot of Indian companies use Kickstarter and Indiegogo and all of that. There, I am not aware of a very active crowdfunding platform inside India, but there must be some. I have not attempted that area, so I'm sorry I don't know the answer to that question. But I do see a lot of companies, Indian companies, trying to get funded on Kickstarter and Indigo.
Thank you, sir. So, next question is from Ramesh Mishra. He asks, can green energy oriented startups generate good marketing cap?
Good market cap, you mean?
Sorry. Yes, sir.
Yeah, I mean they can if they are successful, of course. You have people like Greenco and what is this Renew Power and a bunch of other green energy startups that have done pretty well and have large hero future energies. There are plenty of companies that have done well in green electricity side, but these are generally larger businesses. Startups in that space, we have one investment in a company that is doing robotics for solar panel cleaning. It's also an IIT startup from IIT Kanpur. There are companies of that nature we see every other day who are trying to do innovation inside the green energy space, whether it is through products, whether it is through services, or even data analytics and aggregation. These are spaces in which startups are coming.
Sure, sure. Next question is from Aviral Agrawal. He asks, Sir, what are your views on big startups like the known ones which are continuously posting big loss? I guess he's referring to Swiggy and all.
He's referring to every SoftBank funded startup, without sounding politically incorrect. But look, investors who invest in these companies are not are not fools. They're obviously smart people. They know what they're doing. Uh, they are making big bets on a few startups that will scale really large. So typically, these are companies that they are posting big losses, but don't forget that they are also posting some absolute enormous growth numbers, and as a result of which, they are becoming a very integral part of the life of the consumers that they serve. So today, most people can't imagine uh, life without a Zomato or a Swiggy, right? They are an integral part of how you live today and how you order food, right? Or for that matter, if you are a big basket, you may be making big losses, but your losses actually, as a percentage of your revenue, are actually coming down, and your growth is enormous. You are doubling every year or even more, and people have found this as a new way to buy grocery, and these companies eventually will scale so much and have so much of leverage that they can be enormously profitable as as they scale. So all these investors are pouring in that kind of money essentially to build out that growth and that platform that eventually becomes an integral part of the billion consumers who are buying on those platforms, and as they buy more and as these companies achieve scale, they become very, very strong and profitable at that stage. So that's why they get funded like that.
Yes, sir. They are indeed creating a habit among us. So, sir, next question is from Mukul. He asked, sir, how to get the right time for starting up, as we might be a few years ahead of our market and people might not be ready for our solution.
Well, if there is no customer, there is no business, right? So you will have to. You may be a little bit ahead because you have to still form the habit, like you were saying. But if there is no problem that a customer feels today, then you are not ready for that business, or will not feel in the next, let's say, a few months or a year or whatever it takes for you to get ready. So timing is important. I mean, see, at the end of the day, companies exist or startups exist to serve customers. And if there are no customers, or if they don't have customers, don't have any problem to solve, then you really don't have a reason to exist. So I would imagine the right time to start is when you can. Sometimes founders can see certain things which the customers haven't yet articulated. The problem exists, but they haven't been able to articulate it. If that is the case, you can help the customers articulate it, because then in that case you get an advantage of having seen it ahead of time and having solved it. But if there isn't any problem, then I think you are a bit ahead of time. Might as well wait for it.
Sure, sir. Sure. Thank you. So, next question we have is from a YouTube channel, Problem Mania. He asks, when we realize that our startup idea is failure. Since I have never give up attitude, and I am working on my idea instead of leaving it and starting a new one. Someone has succeeded after 20 startups. I guess he's trying to ask when to stop. If there is failure.
No, so there is a difference between being, you know, close to accept reality and having persistence and perseverance. Having persistence and perseverance is not to give up in the face of difficulty. But if it is absolutely clear that I'm on the wrong path and this is a wrong idea, then you need to change and pivot. And that's not called lack of persistence. That's called pragmatism. And I think pragmatism is an additional quality that the entrepreneur must have besides having perseverance.
Great. So that's awesome. Uh, Sir, before taking this next question, I have my own one question, sir. Uh, we have seen this farmer problem going on in the nation, and we always, since they don't come into mainstream media, we always just over see what their problems are. So, is there some way we can just do something like to the table startup, something like taking directly from farmers or selling into directly market to just remove that middleman, because they are creating a lot of problem to our
See, look,
farmers.
uh, you know, so I mean, I have a different view personally on the legitimacy or the need for the reforms that are currently being done, uh, and then a different view on what should have been the right approach to sell those reforms to the farmers. So I think, see, a lot of what you see as protests, etc., might even be political play than reality. So, for example, if you are saying removing middlemen and allowing somebody like a big basket, let's say, to buy from farmers directly, will actually improve the earnings of the farmers, and it has actually proven to improve the earnings of the farmer. And but at the same time, there can be a misuse of it, which is what is the fear that some big corporate house will go and corporatize farmers, and farmers will be reduced to labor on his farm, etc., etc., which is essentially the challenge that farmers have in their head. But in reality, what is going on right now is essentially politicization of the issue more than actually the problem being put on the table. I think the reforms are necessary for farmers to really grow out of where they have been after the agricultural revolution or whatever happened in Punjab and Haryana, like 3 decades ago. There hasn't been much of reform in Indian agriculture at all, and as a result of which, a lot of farmers, even today, suffer a fair deal, a lot actually, prior to the reforms because of the middlemen involved. Now, the middlemen could be the government, the APMC Act could be the middlemen, and the way the prices are set in terms of minimum support prices. I think a free market versus protection is always going to throw up these debates. For some periods of time, there will be a possibility of certain bad elements misusing the freedom or the openness of the that comes with these reforms. But I think as time progresses, free markets have a way of making efficiency win, and there will always be good actors out there who will provide a higher price to the farmer for his produce, and farmers will then choose to go to those people, and those who are trying to exploit them will lose in the long run. But I think this will happen, and even this particular issue that we are seeing will subside over a period of time. One thing that the government could have done better was built better consensus with farmers and done a better job of educating them on the value that this particular reform brings to them. I think the opposition managed to do a better job of bringing everyone together to the dharnas rather than the government in terms of educating the farmers on what is there as a benefit out of these reforms.
Yes, sir, that's clearly apparent. So, since we are since we are reaching the end, so let's take our last question and then we'll wrap up. So, the next question is from Ashish Kumar. He's asking a generic question: what are the biggest mistakes made by startup entrepreneurs that we should avoid?
Okay, so a couple. Let's just put two, three big markers that are big mistakes made. One is you know romanticizing your idea too much without testing it with customers and making sure that they are real. Second is persistence, lack of persistence, and giving up too early without putting your all into it. Uh, and I think the third one typically is not building the right organization, starting with the co-founding team and then with the rest of the team that is involved in terms of hiring employees and building up the culture early on in the company. I guess these three are typically the biggest mistakes.
Sure, sir. That was wonderful support from your side. You answers a lot of questions from our viewers. Uh, we cannot be enough grateful for you. So I would just love to extend gratitude on behalf of whole team Celesta and IIT Patna for taking out time from your schedule to mentor and guide us. The knowledge that our viewers gained today was exceptional, and Team Celesta is really grateful for you.
Thank you very much. No, we enjoyed interacting with all of you. Thanks a lot. You're welcome.
So, is there a connection problem? I guess. So, hopefully, I'm audible. So, before we wrap this session up, I'd like to inform you about the exciting ongoing events of Celesta 20. Quest Ion is our series of quiz events with prizes worth 5K, and this will be held today on 13th December on Dare to Compete platform. Vivus Chroma is a new exciting event for animation with topic Dream in Reality and prizes worth 5K, and the event is running till 24th December. Anjat is our flagship online treasure hunt, which received international participation in past editions. It will be held on 18th to 20th December with prizes worth 6,000 rupees. 1v1 debate is our debating event with prizes worth 10,000 rupees, and we request you all to register for this as soon as possible as we have limited slots available. The prelims are scheduled on 19th and 20th December. For information about the rest of our events, do visit our website celesta.tech. Thank you everyone for joining with us today. And if you found this lecture helpful, don't forget to share it with your friends. The recording will be available in just a few moments. Let's catch you next week with more exciting events and awesome guest lectures. Till then, the team wishes you goodbye.